Good morning to you all. We were just joking slightly that we have 25 minutes to talk about the global economy. Can we do it? I think so. Thank you all for being here. As we just saw briefly in that video, there is quite a lot to dissect in terms of the trade rebalancing and rewiring, new alignments, but also new opportunities and investments. So I'm hoping we can get into that just a bit. Minister, I was hoping to start with you because Egypt, to a certain extent, has experienced a bit of a turnaround, right, over the past year or so. Billions of dollars in investments, quite a lot of FDI that's coming in to the country. Talk about how the country has positioned itself amid some of this volatility to welcome a lot of this new capital and what you're planning to do with that.
Thank you very much. It's a pleasure to be here. I think to address the question right away, over the past 10 years, we've been investing a lot in infrastructure. So we've put more than $550 billion in the needed infrastructure, highway systems, railway, high-speed railways, 20-plus cities. And the new government that you referred to a year and a half ago decided that we need to build on what has been built on the infrastructure through policy reforms, the needed structural reforms, through policies that are transparent, clear, predictable for the investors. And over the past years, we really focused on the monetary policy, the fiscal policy, the trade policy, and the role of the state. And the work's still ongoing. But the reality of the matter, as we bet on the policy, the results actually was overwhelmingly positive in 1 year, which is a very short period of time. So when we take monetary policy, for example, from a situation that was really challenging a year and a half ago, today every number on the policy, on the monetary policy side is extremely positive. Remittances are up almost 100% from 20 billion to 37 billion. Inflation, which is the most important core of the policy, is down to 11.7%. Similarly, on the fiscal side of things, as we reform, it's a new page. It's about, again, clearing and easing the journey of any investor in Egypt. In 1 year, the tax proceeds are up 35%. Similarly, on trade, we start from a position where trade competitiveness was not as where we would want it to be, and we focus on trade competitiveness. Today, hopefully by the end of the year, the trade deficit will be the lowest since 2010. So again, this gives us the ammunition, the energy to do more reform. That's what is needed, because what Egypt and similar countries of the same path needs is FDI. In a time where FDI globally is down for the last couple of years, around 11-12% consecutively, we need to show investors that we're reforming, that we're committed to reform, and that our competitiveness will be at the heart of where we would want it to be for the investor to come and make money in the country that they invest in.
Thank you. Benjamin, I see you nodding there. I mean, Standard Chartered operates into and outside of Africa. Talk about some of the deal flow that you're seeing. Is it reflective of maybe what the minister is pointing to here?
Yeah, maybe I'll take a half step back, if I may, because the way we see a lot of world flows are reflective of how companies are trying to adapt. And what we're now seeing is a fast change from what was a rule-based multilateral world order, fast shifting towards a bilateral negotiation-based trading system, right?
Negotiation?
That is what we're seeing. So a lot of companies, whether they're European, whether they're Chinese, whether they're Americans, they're all trying to find ways to diversify, to have the business model more resilient, okay? In this process, I do think the whole supply chain is being completely reconfigured, and a lot of flows are now moving towards the global south. The question is, as trade corridors shift from what was an east-west, from, let's say, China being the biggest factory, going to US and Europe on the other side, now it's being rerouted via the global south. To what extent can a continent like Africa capture it? And part of the main ingredient to make sure that Africa is part of this ecosystem is that vitality that Minister talked about, is that infrastructure. Because without that, it's very, very difficult to plug in the whole global supply chain. That's what we're seeing. We're seeing good flows between Asia and Africa happening, but it can be a lot more.
What's your expectation for 2026, especially given a lot of the unknowns right now in terms of even trade negotiations that are happening right now?
Look, I think the world has been more resilient than what most people have expected. Even look at trade. Trade this year so far has been growing at around 2.5%, 3%, which is actually not bad. It's just the way these trades are being done is now very different from what it used to be. And I think what we need to not think too much about is what's going to happen in the next year or next few quarters, but how do you capture the next 5, 10 years? Where are the growth opportunities? Where are the consumption engines? And how do you deploy a huge amount of, I would say, as the supply chain gets diversified, where are the strategic locations that you're applying the flag to make sure you position yourself for the next decade?
Anindya, can you weigh in, especially from the perspective of Indonesia, still without a trade deal with the US, but trying to operate on its own independently? How are you seeing trade rebalancing affecting your own bottom line?
I think, first of all, thank you very much for having me here. I think it's a very exciting moment, actually. If you look at the global trade, last year, United Nations mentioned about $33 trillion already, which is 1 trillion up. And when we look at Indonesia, since the financial crisis 97 and 98, for almost 3 decades, we have been growing more than 5% per year. Mostly on the back of the domestic consumption and government spending. But now the FDI as well as trades are kicking in. Our FDI per year is about $100 billion, and it is on track to hit the same thing. And our trade is about $500 billion per year. And we have positive trade about $2 billion per month. So what we are doing, number one, as a country, we try to diversify our trading and investment partners. So on the one hand, yes, we are getting, we think, a fair deal with the US. However, you can see it. But just 45 days ago, we signed CEPA, a Comprehensive Economic Partnership Agreement with Canada, in Canada. And about 2 months ago, we signed another CEPA with EU. And this is on the back of Indonesia joining BRICS, as well as its accession to the third country in Asia to OECD. So Indonesia is really see this as an opportunity. And let me tell you a little bit about myself, other than representing Bakrie Group, which is an 83-year-old group out of Indonesia in energy, infrastructure, and digitalization. I chair KADIN, or Chambers of Commerce and Industry. So in Indonesia, it is by law, every business organizations, including state-owned enterprises, small, medium enterprises, and cooperatives, have to be under KADIN. And we work with the government when it comes to negotiations to make sure they are good for the business sectors, because at the end of the day, we are the ones that have to execute and activate whatever being agreed. So I think I want to share a little bit about our relationship with Africa. Since 1955, maybe you remember about the Asia-Africa Conference, we all believe in the South-to-South collaboration with Africa. And about, I think, a month ago, the president of South Africa went to Indonesia. We had a good discussions, but I think we're still at the lower pace. Indonesia is at $1.3 trillion economy. South Africa, for example, at about $500 billion. But our trade is only $2.5 billion, right? I think Indonesia, with the move to the green industrialization, can work with Africa in general on the critical minerals indeed, but making sure that the value creation is happening in our regions as well. We don't mind to work with the East and the West, but the value additions have to be there as well. And lastly, I want to mention is that on the digitalization, especially with the AI, I think we need to also be a part of it and be also careful that there is a bubble coming from the West, like in the year of 2000, in the dot-com era. Again, I'm a believer in AI for sure, but the last thing we want is that we are implementing, we're a part of it, and the bubble bursts, and somehow it will affect a lot of countries, emerging economies like us.
Do you think that's where it's headed then?
Well, I'm not fortune teller, but look, anything that is going up in such a... And also, one of the things about AI, when we talk about AI to the AI engineers, it's very hard for them to tell where it's heading. I mean, they think they know, but the same thing for the users like us. We don't know. But It's very useful. There will be a lot of job displacements, but there'll be job creations. We need to use it to increase our productivity. And maybe, if I may, just one thing, we are bullish on Africa. Bakrie Group invests in Mozambique, for example, in the gas field. We hope one day we can also transport that to South Africa and also Guinea on critical minerals such as bauxite and also palm oil plantations. But I think the South-to-South collaboration is very strong, and certainly I agree with Mr. Minister that we need to amplify that for the shared growth. We need to make sure the new growth is shared among the emerging countries as well, and hopefully more sustainable and intelligent.
But just on that, and you were mentioning BRICS, which I'm glad you brought that up, because there still appears to be a reality that's setting in, that there is concern, at least from the U.S. president, about the emergence and the growth of BRICS. Both of your countries joined BRICS over the past year. Does it concern you potentially if the U.S. starts to isolate some of the countries that are a part of BRICS?
I think, look, the U.S. is certainly a big country, but having said that, it's a democratic country. It changes every 4 years, right?
You're already counting down.
Right?
Wow.
Yeah. But, the size of the U.S. economy is probably a little bit less than the EU. And EU, when you have CEPA, it has to be ratified by the 20 countries and all that. So at least it feels a little bit more permanent. So when we look at US, we have to see it, with great respect. They still have the US dollars; they can print it. But I'm not too concerned. I think BRICS will show its strength. And anyway, the numbers show that most of the growth is coming from the global south. And we managed to somehow keep the inflation at bay at 2.5% or so. So it looks like, we're growing responsibly, and especially when the green industrialization is kicking in, all the, developments are happening mostly in the east as opposed to the west.
Minister, can you weigh in on that as well from Egypt's perspective?
I want to talk Africa before we talk, because we're here in South Africa, and I think it's very important. I think Africa collectively now, as we speak, within the content of, again, the African Continental Free Trade Agreement, we feel it's time for Africa. And again, in any bilateral today that we have within the African countries, this is the time for Africa that we need to start developing, putting our strategies together. We need to make sure that the AFCFTA is a reality. And we're making progress, I have to say. I mean, we hosted the trade ministers in Egypt a couple of months ago, and after 4 years of a deadlock, and the rules of origin, we've managed to break through, and we found a solution with, again, an automatic adoption after 5 years. The intra-Africa trade is tiny. It's 14 to 16%. If you look at the intra-trade in Europe, it's 75%. That's the opportunity. But what the principles that we put in our discussions now with the trade ministers, or at least the counterparts in Africa, one, we should not leave any country behind. Second, we need to develop and help each other in the development and of how we progress together, because we can't ignore countries in that journey. Third, it's our ambition in Africa to keep our raw materials in Africa, to deepen our localization, to make sure that we industrialize and we take it in stages. And I think these priorities are one. But again, what we're doing today with the key countries, again, we're here in South Africa, I have a meeting after this with the Minister of Trade and Industry, is that we need to take trade bilaterally to different levels. The trade between us is tiny. And again, when in Cairo, when I saw the minister, I told him doubling, and I felt doubling is nothing. We need to triple the trade. But we also need to address the challenges, because if we take it on the surface, then we're going to solve the issue. The trade, there is a limitation trade. The cost of shipping is very high. We need to have this connectivity with the ship liners, the air cargo, the banking systems that needs to be available for this trade. I think this is the future. This is the time for us to focus. We have the people, we have the raw materials, we are in a very unique location, and despite whatever happening globally, going back to the point about the global, again, divergence, if we are to say, this is the time for the South. This is the time where we need to build our strategies. Again, industrialization, AI, but more importantly, connectivity and having this shared future. On the BRICS, I think I'm not concerned because I think for me, it's a block that is in early stages. I don't think it's something that the U.S., we're partnered with the U.S., we're partnered with Europe. We have trade agreements that open 70 markets for any company that produces in Egypt. But the reality of the matter, the BRICS is a group that is still in formation. We still need to figure out collectively as a group of countries, what's the vision of that group. Again, when you have China in the mix, China is the largest industrial power in the world. So having a free trade agreement with China, we need to talk candidly. How can we balance trade first? How can we use investments and trade to equalize where we are? And by the way, these discussions are happening. So, and openly happening. When I visited China, I met my counterpart, the trade minister, and I told him, every country has a deficit with China, but we need to balance this through investments. And that's the report. This is what is happening now. In Egypt, we do not believe in tariffs. We see the global trends are inflationary, and that is not helping the global growth. And that's why we're easing trade. Opposite to everybody else, we want to ease trade. We want trade competitiveness to be very high. We need to ease monetary policies. The role of everything needs to be restructured in a time where, despite the world moving in a different direction, what matters is competitiveness. Investors would want to find a place, and going back to strategic locations, well-positioned, well-connected, have the trade agreement, the CEPAs, the FTAs, and that's what the investor wants. And we need to speak the language of the investors.
Is that what the clients are telling you, Benjamin?
Yeah, I think the world, back to the BRICS point, I think the world is moving towards a more of a multi-aligned approach. So the Africa Continental CFTA, BRICS, RCEP, CPTPP, all these are, I would say, evolution of different multi-aligned approaches. I think that that's the world that is heading towards. The South-South trade is a very important one going forward because 20 years ago, South-South trade only accounted for around 5% of global trade. Today, it's 20% and rising extremely fast, right? So the two components that feed into that has got to be consumption, trade, and infrastructure. The world has seen a huge proliferation of population. From literally 100 years ago, 2 billion, now 8 billion. Most of these are in the global south. I do think infrastructure is a real economic backbone towards that growth and also a backbone of humanity's progress. And unfortunately, this is exactly where emerging markets can afford least for some of these infrastructure. It is very important. That's why I also co-chair the B20 task force around infrastructure, because I do think this infrastructure deficit is something that we have to fix. The world cannot turn our eyes away from it.
How do you think about the continent and some of the investment that could go into infrastructure as part of the Standard Chartered and the rest of the portfolio globally? Is it where you want it to be? Do you want it potentially to grow over the next few years?
Absolutely. It's not whether the world can afford to invest, or it's whether they cannot afford not to invest, because this is going to be, hopefully, from my opinion, as a bank, we also trying to funnel private capital into funding Africa's infrastructure need. We believe this is going to be the beginning of a flywheel. Infrastructure leads to economic growth, leads to manufacturing, leads to jobs, leads to spending. That economic flywheel is going to be so important for Africa's next chapter of growth. And we are very keen to play a part in it, but it's not going to be one party. Governments, MDBs, insurance companies, investors, they all have to be partake in it.
Is there a risk, though? We talk a lot about the risk with private capital globally. Is there potentially, especially if you think about some of the financial deals that happened on the continent prior to the 2010s, what's the risk with private credit and private capital coming in?
Well, simple as that. Investors simply want predictability of cash flow. When there are risks, they want a premium. And part of the jigsaw is to help government to package, to structure deals that at least try to mitigate some of the risks to make sure the cost of capital for Africa is not punitive. That is a job we all have to partake.
You bring up risk, which I wanted to pivot to, because we have seen quite a bit of risk, of course, in the Red Sea affecting Egypt. And there's quite a bit of economic discontent that we're seeing in a number of countries, including Indonesia not too long ago. How do you see that evolving? Because we're seeing it across the continent as well, so-called Gen Z protests. I don't know if that's what we're going to call it, but I mean, there's a real concern that potentially some of these investments are not actually reaching the ground. Are you worried about that in your country?
Yeah, I think it is a source of concern for everybody that the equitability should be there in the growth story of any country, including Indonesia. Especially, we have 285 million people, about 60% of them below 40 years old, and a lot of Gen Z. So the government is trying to make sure that we balance between, if I may, socialism and capitalism as much as they can. Yes, we are growing over 5%. The inflation is 2.5%. Debt to GDP, 45%. But having said that, we want to reduce or improve the Gini ratio in a way that people can find jobs. For example, there are 2 or 3 initiatives I can just quickly mention. One, the free nutritious meals. It is to 80 million kids and lactating mother in Indonesia. In 1 year, we're already halfway there. So we are making 30,000 kitchens to supply to this 80 million kids. And the second thing, every year we are aiming for 3 million affordable housing. Right? And the backlog is so big, so it makes a lot of sense. And lastly, also the health checkups for everybody in Indonesia. So those type of things is very important so that they feel that the growth is not only enjoyed by a few people, but also for the general population, because it is a country that will probably determine the peace and stability in ASEAN. The 285 million people, that's 40% of the whole Southeast Asian region, and the only country represented in G20. So yes, it is a concern, but I think we always have to balance, and it's also happening around the world, in the West as well.
Yeah, Minister, I'd love for you to speak on that. It's been not too long that we saw that in Egypt as well.
No, I think what matters is development, and you need development that trickle down to the individual, to the people, and you need to have a safety net that cover, again, the social programs that you are embarking upon. As I said, Egypt over the past 10 years focused on the physical infrastructure, but also on the social safety net for the wide majority of Egyptian people. And I think that is very important, that within our policies, you need to tackle the growth, but also making sure that the people would move with you, the vocation, the training. You need the people to be ready for the next wave of things. But what matters, again, is growth, sustainable growth. With that growth, you need also a quality growth. That quality growth would mean that every individual, every Egyptian would feel the economic benefits out of what we're happening. Because if you do physical infrastructure, the individual would say, I'm still hit by the inflation. Right. Again, unfortunately, since the 2020 COVID, and then we're hit with the Russian war in Ukraine, and then the geopolitical scene in Gaza, in Libya, in Sudan. And again, that's why I said the policy reform what matters. Today, when we took inflation from 40%, which is really massive, to 11.7%, now on site next year is going to be a single-digit inflation. That's what matters. That's what the individual. But through that journey of that transformation, structural reforms, we had to put the programs that create the safety net that is needed, because we need the people, we need everybody to move forward with this progressive view of things. I just wanted to comment on one thing on the physical infrastructure of Africa. I think there is a lot of room for the private sector. I mean, I just give you an example. The day before I traveled here, we had at Chad Ministers Committee, we had the Joint Trade Commission. What we're doing with Chad is a landlocked country south of Libya. And now we're doing a physical road that connects southern part of Egypt through Libya to Chad. This automatically, when we finish this, we automatically link to Nigeria, which is western part of Africa. This connectivity is power. This is trade. That's jobs. And I mean, just to give you, Chad had at least what they tell us, 140, 150 million livestock. That is unfortunately not tapped whatsoever economically. And you can add multiple other things across wide regions in Africa.
Is your expectation that we'll see more private sector engagement in Egypt in the near term? Is it looking like Qatar outside of the Gulf? I mean, how is that engagement?
The private investor increased year on year by 60%. And what we're doing now, everything we do is to create a business environment that is conducive for the private sector to lead everything we do going forward for the next 20 years. Even our plans for Africa, when we exchange logistical hubs at the ports, we ask the private sector to manage. We believe it's the time for the private sector in Egypt and to lead that economic development for the country.
Unfortunately, we have to leave it there, but do appreciate all of your time. Benjamin, Minister, and Anindya, thank you so much. Thanks, everyone.
Thank you.
Thank you.